Hello traders, and welcome back to another educational video. And in this one we're going to discuss something that could potentially change the way that you execute the next few trades that you take. Getting started with the educational content, we're going to discuss why reading price action is a more important skill to learn than forecasting the forex markets. The chart that you have in front of you is GBP-CHF. Now going into this, I'll explain to you what our forecast was and what actually happened and how we were able to capitalize on what actually did happen. So as our forecast, we had seen this potential inverse head and shoulders pattern playing out. The market was somewhere in this area here, and we were looking for basically the break of the neckline, a retest, and this is where we were going to take our potential long opportunity all the way to these highs here. This was the trade that we were looking to take, and as you can see, none of that actually happened. Oh well, it hasn't happened yet. So let's go into what did actually happen. So on the 4-hour chart, we were still around this area. Let me just get this rectangle. We were still around this area here. And what we observed was this was our first close. Let me just get this tool to draw. This was our first close above this previous resistance here. This was our first close, and we can see 2 candles later the market closed back underneath our resistance line, and this was the first sign that this market was not ready to complete the move that we were expecting it to complete. And from that moment we essentially had our guards up, and we were looking for a different possible setup if the market was to give us one. So from that break back within so from that break back into structure, we'll go down onto the 1-hour chart and we'll see what was cooking there. On the 1-hour chart, we observed this pattern forming, this ascending type pattern forming. Oh, sorry, wrong tool. Let's just get this trend line. We observed this ascending type pattern that was forming here. And this is very easy to see in hindsight, but we were doing this in active live market conditions. Now where the market was somewhere in this area here, and what we did was we marked out our potential double top region after we saw this bearish pin bar here. So the market then pushed away from this area and returned back to this area. Now after we saw the market react to this area and give us a push away to confirm the move away from this double top region, that's when we went onto the 15-minute chart. And on the 15-minute chart, things get so much more interesting. Let's just wait for this to load. So on the 15-minute chart, this was the impulse that gave us the confirmation to go down to a 15-minute chart. Now on the 15-minute chart, what we saw was this second potential double top, or well, this is a confirmed double top now. So we had this area marked out. We saw the market push up into this zone and then push away from this zone. Now we saw the market coming back into this zone, and as the market got into this zone, we saw this engulfing candlestick. Now the engulfing candlestick was enough for us to take the entry. We had a market execution there, and our stops were obviously above the highs to make sure that we are trading a double top, because we know that if price does go back up and hit our stop loss, then this was not a double top that we traded, and it was just some larger corrective structure or whatever the case was. So we had our targets down at the 90% rule of this pattern here. It was just about there. We had our 90% rule there at the beginning of the pattern, and Our management on this trade was fairly easy. We were triggered into this trade. Market didn't even take us into any type of drawdown, just melted straight. We moved our stops above here when we saw this kind of structure forming, this consolidation happening. We moved our stop loss up to there. The market then went straight down. No, we had our targets just below. I remember the market came and missed our target by like I think 1 pip and went back back, and I was getting a bit nervous now. I was getting ready preparing to move my stop much closer, and then the market decided to go straight down and take us out of the position for above. That means our stop loss was a bit more conserved because we had above 5%. I think it was about 5.8 or something like that. 5 point, yeah, I think it was probably 5.8 or 5.7. And the importance of this recap was basically just so that we know that our forecasting is important to keep us prepared, but our forecasting shouldn't go above the importance of price action, because price action is what the market is actually showing us. Our forecasts are just us making our own biases. We just stipulating, we just want to make money. That's our forecast. But price action is what the market is actually showing us, and price action is really the market telling us exactly what it's going to do. So our importance should be placed on our price action and not so much our forecasting. Yes, preparation is important because preparation is literally all in this game. If you're not prepared, then you're going to war without your weapon, without your weaponry and armor. And just to conclude this video, if you actually gained some type of value, definitely do not be shy to leave a like on this video, and I'll see you in the next one.